This is the Stock Trading Reality Podcast, episode 31.
Got my platform, hit flashy lights, pretty buttons, had some money, thought, okay, this is it. I'm going to work it.
This is the Stock Trading Reality Podcast, where you get to see the realistic side of a trader's journey. Get inspired and stay motivated by everyday normal people who are currently on their journey to trading success. And this is your host, who did not understand what the stock market was until he was 2 years into college, Clay Trader.
Yeah, you heard that right. And if you would have told me that I'd be on a podcast regarding the stock market, I'd think, what are you talking about? What's the stock market thing? It's, a stock for market, a market of stocks. What does that even mean? And here I am. Now I trade. There's a podcast that I'm a part of that's talking about the stock market. But it's crazy to look back and think that, wow, it took me a few years into college to really even understand what the stock market was all about. Before then, I just had a general, just kind of stereotype of it. It just, I don't know, that deals with money. That was pretty much the only thing. I still remember when I sat down with a banker way back when and he said, oh yeah, and then you'll get some dividends. And I'm like, what's a dividend? So, and that was that age, probably 22, 23. So I always get jealous when younger people email me and they're like, hey, I'm age 18 or I'm age 19 or I'm age 20. Some people I'm in, 15, I'm 16. I'm like, wow, I'm jealous. You got such a head start on me that it's crazy. But what about you, Ches? And for the new listeners, Ches is our esteemed co-host. When did you actually know what the stock market was in the sense of understanding kind of, more so than just, it deals with money. When did you figure all that out?
So, I knew that, I just came out of college. I realized that employers are going to be contributing to a 401k and that's going to be spread out across a lot of things. But I never really got interested until I was 24 years old and I kind of had some money that I wanted to move around myself. And of course I had dreams of grandeur and, I'm going to have a Lamborghini and an Apache, that's how I got my introduction. But yeah, it wasn't until I was into work. And I think that's primarily because I assumed that I was, you need $50,000. You need to have a chunk of money sitting around to just kind of have to use. And I didn't realize, the power of options. First off, now you could really come into this with a couple $100 and, make some great gains if you're smart about it.
Yeah, that's true. I think that probably had something to do with my stock market. You need a whole ton of money, so I'm just never going to have any more interest in it than that. But yeah, so that's kind of interesting how all that works out. But yeah, it took me a while. So for those of you that are listening that are younger, below 20, maybe just slightly above 20, heck, even if you're 50, it's never too late to get started. But wow, if I could go back and visit myself, I'd say, look, I know you're only 15, but start to learn about the stock market thing. But interesting how we all have little different journeys like that. Today, we are talking with Moppy, as he goes by. That is his alias. He is, we already did the interview, so he wasn't one of the first 300 members, but he was very early on in the process. Doug is his real name. And like I also mentioned in the interview, I always think of Moppy because we have avatars, and he's got his hamburger helper avatar, and he's always had it. And that's just what I know him by. The members in the chat room, everybody gives me a hard time, but it's true. I don't like when people change their avatars because that's how I really get to kind of know people. It's just what the image is. But he's got the hamburger helper guy, and he's, like I said, he's been around for a while. It's a great interview. He's got a little bit more life experience than some of us. So he dropped some awesome quotes and some really good concepts. Little warning, we get sidetracked a little bit. Now, if you're a science geek, you're totally going to enjoy this podcast, but we talk about some things that really have nothing to do with trading. But I mean, for those of you that have listened for a while, we tend to get sidetracked every now and then. So just push through it. Even if you're not a science geek, I promise we'll get back on topic. But all in all, a very beneficial interview. And I'm one that I'm very confident people are going to, get some good knowledge from and some good little bits of wisdom. So let's just get started. Hey, Doug, welcome to the show.
Hey, Clay. Hey, Chaz. How are you guys?
I'm doing pretty well.
Wow, that's the first time somebody asked me how I'm doing. That never happens.
I don't think anybody's ever asked me how I've been doing either. Although Doug did accuse me of drinking before this based off my fuzzy picture. So
yeah, your picture was blurry.
Yeah, so I guess he equates that with me being drunk. And I responded, hey, the question is, when am I not drinking? if you had to work with Ches, you would understand that perspective. So for the listeners out there, cut me some slack. I have to put up with quite a bit working with this guy we call Ches. But Doug, I appreciate you being here, and we talked very briefly, kind of about what's been going on. I know you've been busy. Real quick, just a little bit of context. Doug, who goes by, like I said, Moppy in the introduction, he's been around since. Have you been around since the very beginning, Doug?
I wasn't one of the first 300. I've been around since either March or April of last year. So
Okay.
I wasn't the first 300, but I was in there pretty early.
Yeah, you were very, very, very early on in the process. I mean, as far back as I can remember, we all have avatars in the chat room, and he's got the hamburger helper guy. And I mean, I'm just so used to hamburger helper, and that's just Moppy. So, yeah, you've definitely been around for a while. But where do you even get started with all this? I mean, what got you into the markets? When did you learn about the markets? And then kind of, when did you take that plunge to put some of your hard-earned money on the line?
I've always been kind of aware of the markets. My grandfather, he was a buy and hold investor, and as is my father. His advice was, son, just buy a good stock and hold on to it, and then it'll make you money. And CNBC was always on in the background, and I got to watch it, and I think, there's money to be made in this, but just buying it and hanging on to it, it might not be the best way. So I started looking a little bit deeper. Into technical analysis. Back in the late 90s, I bought a big, thick black book, Technical Analysis of the Financial Markets. Didn't even have candlesticks in it.
What?
No, it didn't.
What did it use?
What? This is.
It was just bars, high, open, low, close.
Oh, the open, high, low. Oh,
Yeah.
What this is it? Ches, I'm about to start flipping out right now, and we're only 5 minutes into this thing. So
It's okay. Take a deep breath. He's not even done telling the story yet.
good thing I'm
Flip
drinking, or
out
else I'd
later.
really have probably flown off the handle by now. So sorry to interrupt you, but that's mind-boggling. You did say big old thick book, right?
Yeah, I mean, it was basically, I'm presuming a college text. I don't know. I looked for a few books online and found that one. It was about $100. I figured it's a textbook. It was really dry reading the way it was presented, and that's where I first started getting my feet wet. But I was just by myself and didn't have anybody to bounce ideas off of, and so I thought I knew what I was doing, kinda.
So, what did you get any value, or were you able to apply anything from that textbook, or no? Not really.
Not really. I mean, I did get value out of it. The content in the book was, moving averages, Bollinger Bands. It covered everything, just not in a way that was really easy palatable.
So it didn't sway you to, say, take a more active approach in your trading? I mean, I know you were kind of searching, and you had kind of already had the thought in your head that, maybe there's a better way to do this, and you kind of saw some stuff on it. But so where'd you go from there after the book, didn't provide too much insight for you?
Well, after that, I started following a couple of, I jumped right into options because I didn't have a lot of money to start with. I had a young family, not much money, but I wanted to at least give it a shot. And I saw how much options could leverage what little funds I had. So I went and bought a couple books on beginning options, such as that, and found a subscribed newsletter that would give you their option picks. And it sounded good. In fact, I think those guys are still out there. But it's, basically, we think this is going to do this, so be a good time to buy it. Of course, they never tell you when to sell it. And I
Funny how
was
that works out.
I was probably buying their contracts.
Yeah, that doesn't. Let me ask this real quick, just because I'm curious. You said in the '90s is when you were doing, or the late '90s.
Yes, sir.
So, I mean, like nowadays, if you're reading a book, I mean, you can hop online, you can pull up a brokerage, you can watch the market unfold in front of your eyes. Back when you were doing this, I mean, where was the technology at in terms of brokers? I mean, I'm assuming E-Trade existed, but could you literally hop on the internet and start to? Because I mean, that was still like 56K modem days, wasn't it, Ches?
I think so. Doug would know better than I would, though. I definitely wasn't trading at that time.
I think Ches was still in diapers back then, weren't you?
I saw the rise of 56K. Thank you, though.
It actually was on dial-up. And E-Trade was just getting started, and I don't know if it was just getting started or I was just becoming aware of it. So I could hop online, do some stuff on E-Trade, but it wasn't the market unfolding the way it is now.
Okay. I'm just curious because, I mean, people nowadays, as far as I'm concerned, and I'll try not to go on too much of a rant, but you have no excuse. Like, the technology at your fingertips to help in your education is, and I'm not talking about if you're taking my course or somebody else's course or free stuff on the internet. I mean, to be able to read something and then watch it unfold live in front of you on cable internet, high-speed internet, whatever you want to call it. I mean, that's just something where I'm sure, Doug, and I don't want to speak for you, but you probably don't take that stuff for granted necessarily, given how things used to be, right?
Yeah, I'm 47. The internet hadn't always been around. At least not for the average person, and especially not online trading.
Right. So it's just, I don't want to hear your excuses, people. Oh, it's this or that. No, I mean, you could have been using a textbook like Doug had to use and nothing to watch the markets unfold. So sorry to interrupt you, but I was curious about the technology thing because I was curious, how all that worked. But so this newsletter that was giving you hot option picks.
Yeah, yeah, go ahead, Chad.
Didn't really. I'm assuming it didn't. I mean, were you driving a Lamborghini after you signed up for it, or like how exactly did it all unfold?
Well, it was $99 a month. They would. I remember one I did fairly well on was Chrysler. I did fairly well on that one, and that was one of their. And it wasn't necessarily a pick. It was this is what is thinking's going on with it, and would give a logical explanation on, why it was a good time to buy a call or buy a put. I don't think they had any advanced strategies, or if they did, I didn't pony up the money to view them. So I did a few good ones, did a few bad ones. At the end of the day, I was up a little bit, during that period, but nothing to speak of. I wasn't getting rich at all.
Now that lack of getting rich, that lack of Lamborghini, and the lack of Apache helicopter, what kind of broke the camel's back in the sense of you said that this isn't working. Was this the turning point where you realized that you needed to kind of learn how to be more self-directed and kind of find your own trades, or were you still kind of going down the path and maybe looking for somebody else to give you better picks that might have more home runs?
Well, really, actually, neither. At that time, my children's mother and I got divorced, and I had to liquidate, that account. There wasn't much money in it. There was, $4 or $5 grand in it. I had to liquidate that account along with everything else that happens during a divorce. And I knew at that time it was going to be several years before I was stable enough to put some more money in the market, especially if I were going to use it as gambling money, hoping to hit it big.
So at that point in time, did you view the market as a casino where you're just gambling, or I mean, what?
Kinda.
Okay, because that statement, I mean, was that your mentality at that point? Was, hey, I'm just kind of rolling the dice and seeing what happens?
Well, I was taking someone else's advice. I didn't know how to plan my own trades, so in essence, I guess I was gambling and hoping for the best.
That's true. That's an interesting. I'm not going to try to get into a philosophical debate, but if you're not planning the trades, Ches, is by default, are you gambling? Is that just
that is actually a really interesting question because you're putting pretty much 100% faith in somebody else, which is a gamble in itself. So I'm probably going to say yeah.
Huh.
That's I would agree.
Point. I mean, like you said, you admitted, well, I was taking advice from somebody else. Sure, I was paying them. But besides that, I wasn't forming my own trans. So, yeah, in the sense, I guess you were gambling. And maybe, and I don't even think that's an oversimplification. I mean, that's essentially what you're doing, right? Like you said, Ches, if you're just if you're just, trusting in somebody else, that leap of trust right there is a gamble, in and of itself. And then to rely on all that stuff. So, wow, we may just let's just talk philosophy the rest of the time with Doug. I mean, are you a philosophy major or something?
No, I'm not. Actually, my formal education's in chemistry. I was almost an engineer. It was a toss-up.
I was going to say, at least you weren't an engineer, but you said you almost were, so that's close enough.
It was a decision whether just straight up chemistry or chemical engineering. And I just went straight up chemistry.
Straight up, nice. Chemistry, I mean, this interview isn't about me, but chemistry just kicked me to the curb and all the time. I cannot, protons and ions and neutrons. I don't even, is that physics or, I don't even, wow. All right. So, this is, but I can tell you're a very intellectual person. I'll try to keep away from organic chemistry and stuff like that because you'll clearly be able to call me out.
Organic chemistry was what I liked the best.
Now that's the weeding out class, right? I mean, if when they, I want to do this or I want to do that, organic chemistry, those are the classes that are put there to see who really wants whatever, degree they're in, right? Those are the weeding out classes.
It can be pretty tough.
But, this is not, what is it, the Chemistry Reality Podcast. So I got to get, Ches is just laughing at me right now. Like, what are we even talking about right now? I agree, Ches. I
started pulling up our iTunes page to change what we're categorized under and put us under science and something else.
Yeah, exactly. I don't know what.
Yeah, you don't just edit all that out if you want.
No, we're going to keep it in. We got to keep this as real as possible. So,
gotcha.
I don't know. I guess this is episode, people, there have been plenty of episodes. People know we get off topic, but, so after our little philosophical debate, you knew that you need some time to get some money back. So where are we at right now in the timeline of things? So you bought that textbook in the late 90s, and then when were you doing the newsletter? And then when did you kind of decide, you know what, I need to just kind of build back up the fund a little bit before I quote unquote gamble?
Textbook in 99, the newsletters, right about the same time. Went through a divorce in 2003/4. And I knew I wouldn't have any money for quite some time to gamble with, and that's all I was doing at the time. So,
was that your mentality at the time? Was it, I don't have any money, but as soon as I save up, I want to get more money to gamble? Is that kind of what you were thinking in your head? Is you just want more money in your account so you can go gamble some more?
That's not what I was thinking then. That's what I realize now.
Gotcha. So this is all hindsight.
Yeah.
Okay.
Once I got some education, it was apparent to myself what I was doing then. Then I thought, I'm going to make it. I'm going to be a trader. I'm not going to have to work all these long hours. It's not going to be very tough. And when the harsh reality sets in, it's really tough.
It is. Okay. So at the time, you thought you had things figured out. Is that fair statement? Or okay. So I guess to go back to Chez's question, I guess where's the next step when you did get money back, to venture back into the markets, what year was that approximately? And then, kind of where'd you dive into the markets at that point?
I got back in right after the marijuana stock boom. I hadn't really even thought about the market at all. I've got a couple funds for my kids, stuff like that, just educational funds that I don't actively manage. I just give it to an investment broker and they take care of it for me. I got to looking one day. I heard on the news about all this marijuana stock, and I looked. I'm thinking, golly, if I'd put $100 in back then, I'd be rich. And I thought it went way up real fast. It come way down real fast. But more states are going to legalize. Surely this is going to work. And so I started scraping together some money to put back in.
And it also helps, that these were, penny stocks, legitimately penny stocks, some sub-penny stocks. So you could definitely come into the market with a lot less money than, maybe you had traditionally thought to begin with.
Yeah, exactly. And so that was my mindset. That was my mindset then. If I can catch what just happened again, hey, I'll be sitting pretty, guys. And of course, it doesn't work that way.
Yeah. Well, how did it work out for you? That's what I'm like. Where were you doing your quote unquote research for these marijuana companies?
Well, I never actually traded any of them because the boom was already finished. By the time I realized what had happened, it was already finished. But I thought, if it can happen with this sector, it can happen with another. I've just got to have some money in the market to be ready to jump on it when it happens. And it was about that time that I found iHub.
Dun, dun, dun.
Dun, 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 exactly. So I started reading iHub quite a bit, and I found a penny stock that I knew was going to the moon, FROZ.
Wait, say the ticker again?
FROZ.
Oh, yes. Good old Yep, all right.
I drank a bunch of Kool-Aid from FROZ, and I just got Thinkorswim, got my platform set up, had some money in my account, drank a bunch of Kool-Aid, read a bunch of posts on iHub.
Let me cut you off just because I'm curious what your definition would be. Like I said, I can tell you're a very thoughtful guy. Drank a bunch of Kool-Aid. In your mind, define that for us. Define that for viewers. What do you mean you drank a bunch of Kool-Aid? What caused all this Kool-Aid type feelings? Just what is your perspective on it?
But all the people on iHub was just, they're long and strong. They're pumping it. Oh, we're going to buy the dips. These folks have a product. They're selling their product. It's fractions of a penny now, but it's going to be great later. And I started watching it, and it was going up a little bit, and I thought, hey, I'm going to jump in on this. I'm going to get some while I can.
And you said it was going up, right?
Yes.
Uh-oh.
And it was going up. I bought, I don't remember how many, probably 50, 70,000 shares, which on a penny stock is not much.
That sounds cool, though. To tell your friends that you have 70,000 shares of a stock, that sounds cool.
Oh, it sounds awesome. And so I was watching it unfold. I wasn't very busy that day. Watched it unfold, and sure enough, it was going up, going up, going up. And on Thinkorswim, there's a button that says reverse. And I knew exactly what the reverse button was. I knew what it was supposed to do. I had not done enough research with penny stocks to know that you're not going to short a penny stock. I didn't have enough money to, and I really didn't do my research just honestly ahead of time. So it went up. I was watching the tape, I was watching the chart, and it started to roll over, and I clicked on reverse. And I had it to auto send my order. And the next thing you know, I wasn't short 70,000 shares. I had 140,000 shares. And it just starts tanking. I just bought some more is all I did because I didn't do enough research. I didn't paper trade. I just got my platform, hit flashy lights, pretty buttons, had some money, thought, okay, this is it. I'm going to work it. It didn't work.
That's rough. And to be honest with you, I've actually doubled my position on accident before. I'm sure Clay's done it on accident. And that's just something that happens. But you're in kind of big at this point. Is that safe to say?
Yeah. When I first opened that account, I put in $2,000. It started to roll over. Unintentionally, I doubled my position size. So I'm thinking, okay, that's not all of my cash, but I'm just going to hang on to it for a few days, see what happens. The iHub guys are still like, oh yeah, buy an opportunity. Let's buy this dip. They're getting ready to reorganize their company. They're switching to a different ticker symbol. This was just something to get them publicly traded. And basically, I blew up that account. I wrote it all the way down.
So did you ever buy any more, or you just wrote it down?
I just wrote it down. I didn't buy any more.
And how long was this writing down? Was this a few weeks, a few months?
The $2,000 original account, I pretty much blew it up. By the time I sold it, I had about $300.
Okay, and were you constantly reading the message boards and stuff, or is this just checking on it once a week? Or how mentally invested were you in this thing?
I was reading the message boards fairly often, and it was about that time that I found the Inner Circle. I saw one of your posts. In fact, it might have been on one of the froze threads, but it was a post you had done or a chart that you had done. I can't remember which it was, and I thought, this guy seems to know what he's talking about. I'll check him out. And so I went to your site, and I thought, well, $99 for a year. I was paying $99 a month before and wasn't doing that great, so I'll give it a try. So I give it a try.
And then you became a millionaire, right?
I've got 3 Lamborghinis, dude.
Nice. Hey, and that wasn't even scripted from a marketing perspective. Fantastic.
All right, guys. Thanks for tuning into the podcast. We'll see you all next week.
All it costs is $99, and you get 3 Lamborghinis. Yeah. So, yeah. But in all seriousness, I'm trying to prove a point here because I've mentioned this multiple times before, and I swear some people maybe they've never heard the podcast, but I get the impression that they think that, hey, I'm paying for a service now. Why aren't I rich? It should be easy at this point. But so how did your experience go as soon as you joined the chat room and all that?
As soon as I joined the chat room, I noticed that nobody wasn't telling me what to buy or sell. It was, the alerts weren't buy this or sell this. It was just, you're going to have to figure out what you want to do with it. And so I got a couple courses. I got the Penny Stock Survival Guide, and I knew right away after taking that course that penny stocks was not where I wanted to be at all. And I could see all of them what they actually were. Then I bought robotic trading, bought a couple others, and started educating myself and slacked off on trading.
Slacked off now. Define
Wait.
Slacked off.
You started to educate yourself and slacked off on trading?
I did.
So that's a good thing, though, right? Because you're not trading. You're you're slacking off on trading to focus on education. Is that what you meant by that?
Yeah, it is.
That's a great quote.
All right, so that's good. Yeah, that's a great quote, right?
I was going to say, he almost flipped that one
loop.
by me. I'm like, wait a second. He focused on education and slacked off on trading, which is what you want to do when you get started, right, Ches?
That's exactly what you want to do. Don't be like me and go gung ho right after you get educated and you think you know everything. You'll be pulling that reverse button real quick on accident and not even realize what you had done. But I want to backtrack slightly. So did you only make that one trade in that account? Was that like your first trade in that account, and that's the one that kind of bled it dry just about?
No, I'd traded a few different things, had a few losers, had a few winners. At the end of the day, it was pretty much flat. The FROZ was the one that killed the account.
Gotcha. Okay, I just wanted to see if that was like your first trade and it just went completely south, and I was gonna be like, that would leave the worst taste in my mouth.
Yeah, I was gonna say, I don't know if I'd probably be so bitter after that. I'd be like, this whole thing's rigged. I'm out. But okay.
Yeah,
but it wasn't the only one. It was the most memorable one, but not the only one.
Sure. You'll never forget that one, and that's it serves a good purpose and a lesson, which is a good thing. And honestly, so you kind of you quote unquote slack off trading while you're getting educated, which is a good thing. We've established that now. How long did you stay out of the market while you were getting educated? Give us a little bit of a time frame for that.
Probably 6 months or so. Instead of putting money back in the market, as I could afford the money, I was buying courses, one at a time, instead of putting the money in my brokerage account and trying this again. And then when Clay came out with CTU, I'd already bought enough courses that I got a fair discount, for the remainder of it in CTU. And I pretty much stopped trading for a while until I went through all the material.
I forgot about that. You're so far back. You were even around before the university program was even in place. So yeah, right. You are straight up old school. So it's 6 months. Did I hear that right? You took yourself out of the market for about 6 months.
Yeah, for all intents and purposes, it was either put money towards this education or put money in the slot machine. And I felt like the education was a lot better value. Even if I didn't make any money off of it right away, I had the skills to do it in the future.
I hope everybody heard the 6 months. I swear, some people, you tell them, it might take a couple months, which is being more, what? I'm not going to be able to trade for 2 months? A week? I got to sit out of the market a week?
Oh, I didn't like it.
Yeah, exactly. You didn't like it, but you did it. And that's, people just need to understand that, patience, you got to have some sort of patience. And that, this is, so 6 months, that's a long time, especially when most people, you say you got to sit out the market for a day, which is 6.5 hours. They flip out and freak out and no, I'll figure it out on my own. But you actually took, may I say, a wiser approach to all this. Almost like you had some experience and some, like you got started back in the 90s or something. So
kinda.
Yeah, perspective is a good thing. So you're 6 months, you're going through the education, going through the training. When did you finally start to, kind of dip your toe back into the water in terms of the market?
I started talking to one of the Inner Circle members, Mark. He goes by DT.
Come on, Mark. You need to be on the podcast. Call him out right now, Moppy.
I've told Mark he needs to be on the podcast. He's like, I'm not going to do it yet, but he should. He really should.
And he was there. I'm guessing you talked with him on the Saturday mornings, right?
We text back and forth some.
Oh, nice. So you guys made the connection enough to where you exchange numbers.
Yeah, yeah.
That's awesome. I love to hear stuff like that where people actually become quote unquote, comfortable enough to send out your numbers like that. So, oh, that's sweet. I did not know that, but that makes me feel good. So you guys have been texting, and what are you texting about?
Well, Mark watches natural gas and crude oil and plays the ETFs, the 3X, bull and bear ETFs. And he had this paper plan he was working on. And I'm like, Mark, send me this plan. In fact, Ches has a copy of the plan as well. Do you remember that, Ches?
I do. Yep, I'm on that.
So I started watching this plan, and the indicators basically generate buy and sell signals. I started watching it. Now, being the bonehead I am, I didn't paper trade it. I pretended to, and started putting some money in. So about Halloween of this last year, I had a little bit extra money. I was already in CTU. I put $1,000 back in my trade account, or brought it up to $1,000 even, and started trading this plan that Mark had come up with. It was Mark and a couple of guys, and we've all looked at it and made some tweaks to it. And it's not a day trading plan. It's more of a swing trading plan. But after you start watching a certain stock or a certain future, you start to get romantic with it over time, and it's easier to predict what it's going to do. So from Halloween until, I don't remember the exact date, I was up about 200%. Not exactly following the plan, doing a little day trading, following the plan some, and that's kind of where I'm at now. Now that 200% is not all rainbows and ponies.
So your account is up 200% as of this podcast?
No, it's back down. It's about up 100% as of this podcast. I started with 1,000. It was up actually a little over 200%. It was up to about 5,000. As it stands right now, I'm sitting right at about 3,600.
Okay, well done. And just a little more context, Moppy, which I'm sure we'll maybe touch on a little bit, but he hasn't been in the chat room as much as I wish he would be. But he's got. Is it okay if I say your situation a little bit in terms of the business? He runs a family-owned business, so and your life is very hectic right now. So I wasn't aware of that. I didn't know you were doing so well. I always try to catch you a little bit on Saturday mornings, which just seems like when you're in the chat room. But
right.
Well, congratulations first off, and now. So, did it all come from this plan? I mean, what was you kind of? I did a little day trade, and you did a little this, a little that. Well, tell people what did you do to take yourself from 1,000 up to 3,600?
Well, I was watching the plan. I was watching, the way these ETFs move. Sometimes I would trade them a couple times a day. I didn't have enough money, and then let's see, it was probably February, I got hit with the pattern day trader rule. I was up quite a bit, and I had two choices. I could either make my third trade, or actually it's my fourth trade, and get put on restriction, or I could potentially let that profit get away. So I took the trade. I went ahead and made another round trip for that day, and basically had to sit out for 90 days.
That's rough, especially after the growth you've just experienced. I mean, you already did the hard part of sitting out for 6 months to get educated, and now they're like, well, now you got to sit out for another 3 months. That's tough.
Oh, it hurt. It killed me. I was sitting there just like, oh my goodness, if I open a position today, I can't sell it till tomorrow. And so I had to change quite a bit. In fact, I've emailed you a few times about it, Clay, about look at this chart, look at that chart, am I doing this right? And so I had to change my plans, and I had to sit out on restriction for 90 days. And I didn't do a whole lot during that 90 days. That's kind of where I'm at right now. I'm off restriction. I can actually trade again. And the restriction did me good. I thought, oh my goodness, I'm being punished just because I don't have as much money as everybody else. But it made me realize that, you can't just go after it day after day after day and not follow the rules because I don't like it, but I guess they're there for a reason.
They're there for a reason. I think we all have our opinion on the whole pattern day trading rule. If you're just not sure what that is, I have a couple of videos out there, so we'll link those in the show notes on that. But yeah, I'll just leave it at that. I don't want to turn this into politics or anything like that. So right now, I mean, are you doing options at all, or are you still just focused on the ETFs?
I'm doing some options. I day trade a few options. I'll swing trade a few options. I watched all your advanced courses, since I'm CTU, but as busy as I've been, I don't have time to plan the trades like I should. And if I can't plan the trades over this last couple of years, I've learned not to make them if I can't plan them.
I was going to say that's such a revelation.
Sound advice right there. That is sound advice.
If you can't plan the trade, then you probably shouldn't be taking the trade. And if you can't, I mean, that's just a huge step in and of itself for you to actually realize and admit, like, hey, I don't have the time to plan this. And if I don't have the time to plan this, then why the heck would I be putting money onto it? So that's awesome. But I mean, when you are trading, let me ask this. What do you prefer? No, let me ask you this. Because since you have experience with penny stocks and now you have experience with options, and I like to ask this because I know a lot of people are always, what's the big deal about options? I'll just stick with penny stocks because you can use small amounts of money. But if this was a court of law and the judge says, hey, penny stocks or options, which one are you going to choose and why? What would your reply be? I know you're a chemist, but let's pretend you're a lawyer.
I don't know if I can be a lawyer, but the difference between the two, I can control 300 shares of Apple by buying 3 contracts. There's nowhere near enough money in my account, including margin and everything else, to control 300 shares of Apple without buying a contract. And those contracts move pretty easily. I can put in a $600-700 trade for 3 contracts on Apple, and at the end of the day, maybe into 2 days if I hold overnight, I've made a couple $100 on it.
So that's a good percent return right there.
And would you agree from a liquidity standpoint, it's much easier to buy and sell options than it is in the realm of penny stocks?
Penny stocks are terrible. You have to sit there and wait for somebody to buy your shares at the price you want to get from them, unless you want to give them to the bidders at their price.
And even when you hit the bid, for you listeners out there, I'm sure some of you can relate. Sometimes you put in the order at the bid, and then the bid all of a sudden disappears, and you don't even get any shares, and then the bid's that much lower. Has that ever happened to you?
FROZ was really my only main penny stock. It was fairly liquid, but it really was slow.
Yeah, exactly. It's just that's the best way to really put the penny stock market. But penny stocks, they're explosive. They're this, they're that. Yeah, when you wait 3 weeks for something to finally move, I mean, at that point it's fast, but for the most part, yeah, exactly. They're just slow. I mean, everything about them is slow just because they're not an efficient market. They're an inefficient market because there's just not that much volume down there. So I'm super curious to ask you this, since you've had quite the gamut of experience here. But how did losses, how do those used to affect you? Mentally, did you struggle to take them? I mean, obviously with FRZO, you just rode that puppy all the way down. So, how did you view losses? How did it mentally affect you back then compared to, now how do you view a loss? And, does it still shake you up, or, what's the differences?
Well, losses back then, it was admitting that I'm a loser. If I take this loss, I'm a loser. I didn't do something right. And I'm not a loser, so I'm not going to take this loss. It'll come back eventually. They all don't come back eventually. In fact, FROZ, I think, is down at the triple zeros. But fast forwarding some, taking a loss now is no big deal, as long as it's a small, controlled, and planned for a loss.
So would you say are you more disciplined now as kind of time has gone on and you've kind of gotten educated and you've actually seen firsthand that if you let things spiral out of control, there can be dire consequences?
There's definite dire consequences. If you hang on to it because you're a winner, you still end up being a loser. You know,
Love
there
it.
is there is no winners when your account is down 85%.
This is very true.
Yeah,
Well,
no,
there's winners on the other side of the market, just not your side. You know, somebody made money off my shares. It just wasn't me.
So, so what would you say are your favorite indicators that you're using currently with, I know you're kind of trading the plan, but it seems, everybody kind of modifies things to their own liking. What are you using specifically?
Specifically, use a few moving averages across several time frames, the 200, the 50. I use a couple of volume weighted moving averages, the 8 and the 20. TOS Thinkorswim lets you use volume weighted averages, if you choose to do it that way. MACD, I really like MACD, where you can look at the divergence on price versus what MACD is doing. That's really helpful. If everything doesn't look quite right, I might look at money flow or RSI. If I've got the time to actually day trade, I like looking at Bollinger Bands, because if things are not right with the Bollinger Bands, something else is about to happen.
I gotta just ask, and I'm kind of nervous to ask this, but please tell me you have candlesticks on your charts.
Absolutely.
Okay, I was hoping that textbook still wasn't influence you from way back in the 90s, and you're sitting there with like a line chart or something like that. Okay, so, and I'm assuming volume too, candlesticks volume, the basics.
Yeah, absolutely volume. And the moving averages that I use, a couple of them are volume weighted, so I don't look down at the volume bars as much as I probably should, since those moving average lines are volume weighted. It kind of figures it in for me a little bit.
I can see that. I've never done that, but I mean, it makes sense, but it just goes to show that there are many ways to trade this market. And to go way back when Doug said he noticed in the room that nobody was saying buy this or buy that, but hey, take this alert and then you figure out what you want to do with it. This is what he means by that. This is, the philosophy is you need to figure out what your little, nooks and crannies are that you feel comfortable with. And perfect example, Doug uses volume weighted moving averages. I don't use those. I don't think you do either, Ches, right?
I do not.
But that doesn't mean that Doug's wrong or that he's right or anything. It just shows how we're all different creatures of personalities, different risk tolerance levels. We all have different comfort levels. So that's kind of an interesting thing. But it doesn't sound like your chart has a million indicators and anything. It sounds like you're keeping it pretty basic, right?
Yeah, if you look at my chart, it's got the candlesticks, it's got the moving averages. I've got the volume bars along with the volume average, the 50-day volume average or 50-period volume average, and then the MACD. That's about all I use. That and watch level twos.
Okay, so because I swear some of these charts I see out there, they got. I mean, and I'm not innocent of this. When I was first started, I thought I needed 35 different indicators, 26 different overlays, and so it was craziness. But yeah, KISS, keep it simple, stupid. It doesn't need to be. You don't need to have any of Andrew's pitchforks or whatever those things are out there. I don't know, maybe you do, but it doesn't need to be complicated. Now, in terms of routines, rituals, do you have anything that you do? When are you usually doing your homework? Are you doing that kind of the night before the market, whenever you can find time? Because I know it's busy, but I mean, do you have any sort of routines that you like to do?
That's one of the reasons I'm not in the chat room as much as I used to be. I'll go over to the over $1 pit. And instead of chatting with everybody else, I'll look at the alerts for the day, click over to the chart, see why it was alerted, what was going on, and how I could have played that. Then I'll go to the next alert, look at it. The market's already closed. I can't play it, but I can see what everybody else is seeing, why they're seeing it. And even though I'm not trading it, it might help me in the future.
It is nice, and we kind of, it's nice with those timestamps because even, in our webinars, we're able to look back at when it was alerted, and then you can kind of, just like you were saying, kind of plan how you would personally trade it, and it's great practice. And, if you do decide to actively trade more, you're doing all the legwork and kind of all the work you need to do ahead of time, so that's great to hear. But what would you say are some of your weaknesses that you want to work on, and then what do you think your particular strengths are right now in your trading?
Weaknesses. I get so excited. It's almost like doing drugs, I guess. If
We've heard that before, Doc. We had a conversation. The stock market can be like a drug.
that's probably my weakness. I've read a few books on the psychology of trading, and I've gleaned a lot of good information from those about why people do what they do, myself included. So I look at that. I guess my strengths, I've slowed down quite a bit. I've reduced my position size a bunch.
Nice.
Before I would go in with, I guess I thought I was playing Texas Hold'em, just, go all in and hope for the best. But when you go all in, then you can possibly lose it all. So now I've got some stops, take a small control loss, and it doesn't hurt near as bad as riding it down.
I think your biggest strength can be summarized in the statement, which is one of the easily top 5 of any podcast. Is when you said, if I don't have time to plan the trade, I probably shouldn't be taking the trade in and of itself. There's so many forcing trades. That's something that gets everybody. And to hear that rationale, I think that's a good kind of overarching theme about probably what one of your main strengths is. You finally realize, if I don't have time to plan it, if I don't feel comfortable planning it, I just shouldn't even take the trade. So that's the fantastic way to look at it. So we're going to start to move in towards, wrapping things up. But, you said you've listened to about half the podcast, so I'm sure you're aware that our good friend Ches here owns a time machine. And
He does.
he will lend it out to you. So, if he would choose to lend it to you, and you could go back to 1999 when you were getting that textbook right at the beginning, what bit of advice would you give yourself?
I would probably buy more than just one textbook, do a little bit more research. It was an expensive book. I thought, okay, it looks like a textbook. It probably is a textbook. I probably would have done a little bit more research before just reading the book and hopping right in. I really didn't do any practice. I just read the book and say, okay, I think I'm ready. So I wouldn't have done that. I would have done quite a bit more research. Not in terms of, fundamental research, but just more technical analysis research.
Yeah, learning, right? And investing into your education, which you did, and you said, you figured I can either spend the money to put in my account, or I can spend the money and put it into education, which, as you said, would give me skills that I can use forever. So,
Right.
You wanted to, research, aka, and I don't think I'm putting words in your mouth, but you just wish you would have invested into your education way back when. Is that accurate?
Yeah, that's accurate. Very accurate.
Perfect. I think Ches, we're going to move into the fun round, so I'm going to give him this first question, which is my favorite question, but I'll let Ches ask it.
It's the most important question on the entire podcast. It pretty much determines if, regardless of your history here at claytrader.com,
And I
if
like
Clay will allow
Moppy
you to
a lot.
stay.
I like Doug. Doug is a good poster, but yeah, this answer could sway my opinion.
So, Doug, dun dun dun, what is your favorite movie?
My favorite movie, I've got a couple. Probably my favorite movie of all times is Airplane. It's a silly, goofy spoof movie. If those of you who don't know Airplane,
No, I saw a list once, and I think it was like best comedies, and Airplane, I don't think it was at the top, but it was on that list. So it's like a classic comedy from my understanding. I have not seen it, but it sounds like I should.
Wow. Yes, you need to see it. Wow, I can't believe you have not seen it, being a quote-unquote movie buff that you are. Yeah, you need to see it.
Okay, I'm going to tell my wife, we got another movie on the list that we're going to have to add to movie night. So Airplane it is.
You got the guy in the control booth, in the air traffic controller, and first off, he picks the wrong week to quit smoking. Then he picks the wrong week to quit coffee, and then his hair's all tasseled up, and he's like, "Oh, looks like I picked the wrong week to quit sniffing glue," and out the tower window he dives. And it's an awesome movie.
It's a funny movie, yeah.
So it sounds kind of like Dumb and Dumber type humor, which is right up my alley.
It is.
Oh, then okay, that's a definite. Then I'll definitely have to give it a while. What about your other movie? Out of curiosity, you said you got a couple.
I'm a huge Monty Python fan.
You like to laugh, don't you?
Oh, I love to laugh.
I didn't know chemistry people laughed. I thought they were just always looking at their beakers and whatever test tubes and Bunsen burners. That's what I was looking for. That freaking Bunsen burner.
But I didn't finish school. I didn't finish school. I went into the family business, which has nothing to do with my education. You know, I sell tires and work on cars, which has nothing to do with chemistry.
Well, tires are made of rubber, and rubber's got a bunch of chemical compounds in it. So
This is true.
Yeah, you're in your career field a little bit. So what about your favorite food? I know you're down in Tennessee. So I mean, what are you looking at? What do you just like to put back when you're hungry?
I'm a connoisseur of meat. I love to grill, smoke, just however you can prepare meat. If my wife would let me, I would live off nothing but meat, although she does make me eat my vegetables.
No wonder why you and Mark get along so well, because he's always posting the pictures of him doing grilling.
And the ribs, and yeah.
It sounds like we need to have an inner circle barbecue.
I agree.
And Doug and Mark can be the chefs. However, Mark, you got to get on the show. So
if you don't get on the show, you can't be one of the pit masters.
Exactly. There we go. Pitmaster. See, I'm not quite the connoisseur of meats like you are, but I agree. I wish I could live on meats and that would be it. But those green things, supposedly I'm supposed to eat them. So what about your favorite dessert?
I'm not a big sweets eater. I'll eat a little ice cream from time to time. Sweets, my parents wouldn't let me have sweets growing up, and I never developed a sweet tooth.
They did you a good service there, because I grew up on sugar, and I'm surprised I don't have diabetes at this point in my life. But that's besides the point now. What would you say is your favorite song or band?
That's a tough one. It's probably, I guess I'll pick two: Pink Floyd, and since I'm a Southern guy, Leonard Skinner.
Can't go wrong. So if I ruined Pink Floyd for you on the webinars?
Well, I might listen to Pink Floyd while on the webinars.
Nice. What do you like to do for fun or hobbies?
I'm actually into lasers. I take used industrial and surgical lasers, convert them to light show use, resell them to some light companies. I've got a few that I keep around the house where I can do some light shows. You know, I'm kind of a geek.
What does laser stand for? Light amplification. What does laser stand for again?
Light amplification, stimulated emission, or radiation.
There it is, right there. I want to see. Oh, let's see if he's really knows his lasers, because I knew laser stood for something. I couldn't remember quite what it was, but you passed with flying colors. So that's really cool, actually. I actually used lasers when I worked at Honeywell. We welded with lasers, so for the little micro parts. So
yeah,
it was micro welding. It was
used.
It's fascinating stuff. I mean, to think that little lasers can do, and like you said, light, or the lasers are just light. So to think that light can be condensed to that amount of energy is pretty crazy. And like, hey, Ches, go change the name. Science. You know, we talked about chemistry. Now we're talking about lasers.
I was gonna say, going from the chemistry, now we're talking about lasers. I'm totally changing the category of this podcast to science and research. But
I blame Doug.
I'm going to take us back on track, even though lasers are pretty cool and I do enjoy them. But yeah, you guys are laser buffs apparently. What are 3 words you believe are associated with successful traders, not laser users or chemistry, buffs? What do you think are 3 words for successful traders?
Discipline, for sure. Gosh, it's hard to come up with 3 words spur of the moment, and I should have known this was coming.
We're not letting you off the hook either. We'll sit here in awkward. This podcast will be 3 hours, and 2 hours of it will be awkward silence. So you have no excuse. This is not a bamboozled question at all. We ask it every time. So take your time.
I know. There's got to be discipline. Is the first one. Education, and probably the third's position size.
I like that. Very good. See, you caused all this drama, and then you gave 3 good ones. So fantastic. So, well, Doug, in all seriousness, thank you so much for hanging out. It's a context right now. It's about 8 o'clock Eastern time on a Wednesday night. So I appreciate you taking time out of your day, especially knowing how busy you are. So thanks for hanging out.
No, it was great. I had a great time. We need to get Mark in here next.
Yeah, he got called out a ton, so he really has no excuse. I mean, he can get on here, right? He has no excuse. Would you agree with that?
Yeah, I think he can do it. I mean, he can do it. He's got time to chat. He's got time to chat with the podcast.
Yeah, see, there you go, Mark. So your text buddy here. And like I said, Mark, I want you to be a pit master, man. So get on the show. Well, thank you for everybody watching. Thank you to Doug, a.k.a. Moppy. And if you enjoyed the show and you're listening to this at the website, go ahead and click that share button. Leave comments below. We read all those. If you're listening to this on iTunes, please click the share button there and leave us a comment. We like to hear all sorts of feedback. And, just little ratings like that. Let us know that, hey, we're enjoying the show. We want you to keep making them. And as long as that is the case, we will continue to do so. So thank you again for hanging out with us. We will see you back for the next episode.
This has been the Stock Trading Reality Podcast. Thanks for taking the time to hang out. To learn more about Clay and the Clay Trader community, including the trading team, premium training, and more, visit claytrader.com.